Today we are going to start our webinar with the topic driving innovation in banking and insurance through digital transformation. Right? As in recent years, the banking sector and as well as the insurance sector has actually seen a lot of significant innovations going on. Many of these are actually driven by rapid advancement in technologies such as your AI, your blockchain, your Internet of Things, AR, VR, all these wonderful innovations. So today we are fortunate to have three very heavyweight speakers, right? And I'm going to introduce them. The first on our list is actually Mr. Rajat. Okay, Rajat is actually from FinSight Global Consulting, right? He's actually one of the co-chief executive officer. And then secondly, we have Mr. Richard Hatton, managing director of Transcarta. And we also have Mr. Arjun Chip, global program director of Financial Crime Standard Chartered Bank. Would you gentlemen like to introduce yourself so that the audience can actually know you a little bit more? Shall we start with Rajat?
Thanks, Danny. Hi, everyone. I'm Rajat. I'm currently the co-CEO of FinSight Global Consulting, as Danny said. But prior to that, I spent 28 years with HSBC. Yep, career HSBC guy, where my last role was the regional head for digital and transaction. And over the lifespan of working in HSBC, I've seen so many changes in digital automation that it's a very fascinating topic, very pertinent topic because of various facets to it. And it'll be really interesting to hear what Richard and Arjun also talk about. Over to you. Back to you, Danny.
All right. Next, shall we call upon Richard to introduce himself?
Great, thank you, Danny. Richard Hartung, working at Transcarta. Back when I was at Citibank in Japan, setting up retail banking before they shut it down. And then moved to Singapore about 30 years ago, worked for MasterCard, worked for OCBC, so in the cards area. Set up Transcarta about 20 years ago to focus on consulting and advisory work in retail banking, primarily in payments and other areas as well. Look at strategy on it, look at back office optimization, do some training in a variety of other areas. Also do some work with Asian bankers, a client, on some work on research and writing. So it's a pleasure to be here today.
Thank you, Richard. Arjun?
Thank you, Danny. Good afternoon, good morning, everybody. My name is Arjun. I work with Standard Chartered, like Danny gave a pre-snippet. Got close to over 2 decades of experience spread across Citi, ABN, and Standard Chartered. More of an operations and a technology guy, but I've had the length and breadth of experience across all retail products in the country, group, the shared center in different capacities. Over the last 2 decades, I would say that I'm fortunate enough to have seen banking evolve and move away, which Richard and Rajat, I'm sure, and Danny will agree, move away more from paper into digital. And what digital means to all of us, that is what we will discuss. But I've been part of the digital journey at the bank, transformation, regulatory, business pressures, etc. So I think it all fits in very well, and looking forward to an interesting conversation. Back to you, Danny.
All right, thank you very much, gentlemen. So I am very curious about what Rajat is going to share with us today, right? He actually have a different interpretation for AI, which is call it as actionable intelligence, right? So what is this actionable intelligence that you are actually talking about, Rajat?
Thanks, Danny. So, just taking a step back, and I'm talking about the 90s when you had, or 80s when you had movies like Terminator coming out with, machines and robots taking over, and everybody had this fear factor. The reality is technology is as good as its logic and the coding. That's my view. And I think people get a bit obsessed and fearful about technology and automation and digital. Yes, there is a right way to look at it. That it does mean changes to the jobs. It does mean changes to the people. It does mean changes to legacy processes. But what it doesn't mean is that it's going to be a doomsday. What it means is that people have to adapt and make use of it to actually make proper use of digital automation architecture. And that's where actionable intelligence comes in. When AI comes in and everybody equates it to machine learning and doomsday, the reality is machine learning is a fantastic way to make use of your time to adapt things to what becomes useful tools for you. As an example, back in my old role in HSBC, we started with using machine learning for doing static triggers, whether it was for money laundering, whether it was doing it for operational processes, whether it was doing for sales opportunities. It was static. You looked at, let's say, Arjun's data account and you said, okay, this is the data that comes, and okay, Arjun might be a guy who might be interested in doing something on equity or whatever it might be. But that was just a static way. Then you move to what we call prescriptive. And then you move to what we now call predictive, where machine learning really comes to its own. Where looking at the data, you say, okay, what can be predicted from this customer or this set of customers, because it's not homogeneous anymore. And as the customer base becomes so much more complicated and diverse, and you have different corridors, geopolitics, and everything else coming in, the reality is on your own, your individual brain capacity can't think of so many multiple variables to take the informed decisions. And that's where I come in with actionable intelligence. You create the logic path and say, okay, what is it that I want to see as an output from this huge amount of data that's there? Create that logic path, see what the analytics is, use the outcomes and say, right, what is the intelligence that I can bring to the table, either using digital campaigns or manual campaigns also, depending on how it wants to run. And then see whether this AI, this actionable intelligence can make money, has commercial backing to it, as well as making us meet the non-financial risk adherence, which in today's world is as complicated as ever, and Arjun can talk more about it from his experience, but I can tell you from my own previous roles experience and even what I consult on today, 30 to 40% of the time is actually spent on the commercials, 50 to 60% of the time is spent on non-commercials, where you're busy trying to battle regulatory requirements, anti-money laundering requirements, risk requirements, operational resilience requirements. There's just so many other facets. And if you try and devote all your time to all these different things to conceptualize something and bring it to life without the use of actionable intelligence or machine learning, you've got a problem.
All right. So what do you see are some of the key benefits for banks and other financial institutions in terms of your suggestion that everything need to be actionable after you have gathered all your data, after you analyze it, after you have come up with the predictive model? How is it going to benefit all the rest of the banks and financial institutions that are going to adopt?
I think it's a simple function of where we are today. There is so much conversation happening on cost control, headcount reductions, et cetera, et cetera. The reality is you can flip it around and say, right, what if I was able to control costs by X by doing this in a digital way? What can I do to make more revenues by keeping the same costs and headcounts? As an example, if I was making 100, I can make 130 or 140 from the same level of people, same cost, same data extraction, except I'm going to use it a bit more differently. And that's where the new age, new age technology, automation, usage comes in. And it's actually sector agnostic. Right now, I'm talking about it from my own experience as a bank, but I can tell you when I talk to asset management, insurance, e-commerce, even payment channel operators, which Richard has so much more experience on, each of them can actually make use of this in a very, very agile way. It's just a question of how you want to position it. Like I said, if the positioning is fair, everybody will have a problem. If the positioning is ambition to grow, and even in a market like this where we're coming out of COVID, as long as it ticks all the boxes, if I go to an Arjun, I'll say, Arjun, I want to do this, and he'll say, okay, what are you going to do for resilience? What are you going to do for anti-money laundering? What are you doing for regulatory requirements? You want to start a corridor between Singapore and India for the stock market, whatever exchange. As long as they tick all those boxes and provide a good digital agile solution to it, I don't think people should be fearful. And therefore, I'm pretty confident after we get out of this current funk that people are in, the world is going to be a pretty exciting place.
Can I just add to that, Rajat, in terms of what you shared was fair. I think all of us have been in that, and for the participants also to note that I think there are solutions for technically everything to whatever financial institutions will have a problem for, right? If you have a problem, there'll be probably 3 or 4 solutions. But a lot of these solutions don't really solve the entirety of what one is looking for from a problem perspective. So my individual learning is that when you're trying to solve for a problem, we should be very clear on what the problem we're trying to solve for. And then when we're looking at solutions, got to be very clear that the solution will help address those and not create newer potential issues. Like you spoke about the checklist to tick off, right? So I think it's got to be a very, very clear, thought through diligence process in terms of whether the solution which is being offered solves for the problem. I just wanted to add that and share that, with the viewers as an additional point.
No, spot on, Arjun. I mean, I completely agree and that is where the new age thinking needs to come in, because historically you were hell-bent upon being unipolar, if I can say that. You just said, oh, this is my business, this is my problem statement, and you just went about solving that, and suddenly it would all come back to you saying, but you didn't think about these 10 things. In today's world, you've got to be multipolar in your thought. You've got to say, okay, I'm going to think of this. It makes sense from my global markets, cross-border FX experience. But guess what? I've got to think about these other 5 things, because if I don't, it just gets delayed and it just goes into a huge loop. And I think that's what people are now beginning to do. And that's why I come back to where actionable intelligence is. You need to make use of digital automation and actionable intelligence to solve all this. There's no way a human or a set of humans or a set of people can just do it. You can create all the pods you want, but you still need to have that agility that digital transformation brings to you to do this.
Well said, gentlemen. Wow. Okay, I think that is a very interesting perspective from the banker's point of view. What about Richard? Richard is actually very much into environmental sustainability, right? Like what the 2 gentlemen just mentioned. Actually, our world is all interrelated, is all intertwined, right? So from the perspective of Richard, what would you like to share about sustainability?
Okay, and I'll be focusing on environmental sustainability, not the social side of it. When people think about environmental sustainability, and from a corporate perspective, the general perspective is, oh, it's a really good idea. Climate change is really bad, but it's going to cost me more money, so I'm not going to do anything. And so that it's hard to overcome that in many ways. I look at climate change as sort of the defining issue of our time. If we don't solve it, we'll be here all that long. So it's really important to solve. But it comes in a number of different ways, and I've looked at it primarily on the retail banking side, and then more broadly at the bank side, in terms of what the bank had done. If you look at the individual consumer, the surveys are saying 70%, 80% or more of individuals are concerned about climate change, and the UOB studies run out of Singapore for Southeast Asia are showing 80 or 90% thinks companies should do something about it. So if you're sitting back and saying, hey, don't worry about it, you're going to lose those consumers to people who are actually making a difference in there. And so there are a number of, and companies, the same kind of thing. There are regulatory mandates in some cases for companies. Banks are requiring, in some cases, the calculations of environmental footprints in order for people to get lower rates on loans or loans at all, especially for SMEs that SMEs don't think about. So, they need to gather information, they need to make changes in the organization to promote environmental sustainability. So it's good for the planet, but what about for the individual? There are a number of examples of what banks are doing that actually do make a positive difference. If you look at the US, there's a card called Future Card, and you get 5% back on your green spending. So if you're spending to charge vehicles or take public transport rather than going to the petrol station, or buying eco-friendly products because they can do level 3 data, buying eco-friendly products, you're going to get 5% back. DBS has something here called an eco card, and it's similar in a way. I think here and in Taiwan, Singapore and Taiwan, where if you're doing things like shared rides or paying for EV charging, you're going to get 5% back. And so they're using that to incentivize behavior, which will gradually shift what people are doing. There's a company out of New Zealand called Kogo. And what they're doing is taking data, working with the banks, and they put a package together, software as a service basically, where they accumulate data about the individual and enable the individual to calculate their carbon footprint based on what they're doing. If you just look at the payments business, that's based on what you buy. But if you look at your bank account and you're doing direct debits, for example, you're paying your utility bills, and it's like 5 times as much as other people in your city, or it's 20% lower. You can get some information back to them, and they'll send out personalized messages that can begin to change people's behavior. So that kind of thing is an example on the retail side of what's being done, and there are a number of examples as well. On the e-commerce companies are doing some things around sustainability as well. You can do carbon offsets, for example, when you're shopping, if you're using Stripe or Adyen, for example. So that's the kind of thing. The terminal manufacturers are making terminals for payments more durable as another one. In the back office, banks are actually doing more than we might think. And so it's, they'll promote it as green and environmentally friendly and whatever else, and position it that way. It's good. They're also saving costs. So, as one example, DBS has saved something like 208 tons of paper. And say, we save paper. Well, they also spent a whole lot less money on paper and all the paper that goes along with it. So there's a multiple benefit in there. ICICI in India has put solar panels on a number of their branches. They're making them eco-friendly. Well, it is eco-friendly, and they're also cutting down on their electricity costs, which can be pretty expensive. And they make sure they have reliable electricity. Electricity doesn't go out with solar panels; it just goes straight down into the building. So there's a combination of the consumer actions that are going on. The banks internally are taking those actions. They're also providing some similar information to SMEs or larger corporates and working with them on developing green plans. I can keep going on, but let me stop there as some examples of what's being done.
Right. Thank you very much, Richard, for the sharing. I think it's going very exciting for the banks to also be involved in this area of our life. But having said that, how are they going to inculcate data analysis, right, in terms of how is it being applied at the moment, and in the future, in the near future, will there be more things that is going to be more personalized and make it in such a way that as an individual, you feel like although it's digital, but actually you are talking to a human. So
yeah, absolutely. And this goes sort of beyond the sustainability and climate change side. There's really hyper-personalization is starting. So if you go back, however far you want to go back, there's been, banks would have data, and it used to be you'd get sort of data about things a day or 2 days later, and it took a while, and it gradually has gotten faster. And then they said, we're going to accumulate the data. So you had a data lake or a data repository or a number of different names for it. And it's sort of like your water going into a lake and never coming out again. Nobody could figure out how to access all that data that was there. So great concept, but never really happened. What's happening now is the hyper-personalization. And a very small number of banks are beginning to do that and use it. So what this does is, the 4 of us probably have different profiles, and we want different sorts of information. UOB in Singapore, for example, gives each individual a different dashboard in terms of what they're looking at. And so when I open up my banking app on the phone, what I see is different than what the 3 of you will see. Based on my profile, there should be some recommendations in there about products that it'll have, or alerts that I based on my behavior. But it is that hyper personalization that is coming in. Another area where that is coming in quite a bit is in wealth management. And this can be mass affluent or the ultra high net worth individuals, the whole spectrum in there. And so there are a number of organizations, Bamboo and others, for example, that have put the robo advisory services together. And we usually hear about that in terms of something like Stashaway in Southeast Asia, where I can put my portfolio with them and they'll use robo advisors to do it. But internally, the private banks are also using that as a tool for their personal advisors. And it's enabling the personalization. So my wife and I have very different profiles. She wants to make a 10% return with 0% risk. A little hard to do. I'm trying to figure out that one, but her big thing is 0% risk. I'm a risk taker, and I'm sort of the opposite end of the spectrum. So what we're going to need in terms of our portfolios or our financial is then the advice we get from private bankers, if we have separate private bankers, is going to be very different. And so the data that comes in can take that into account through a combination of what I tell my banker, the transactions I actually do, the inquiries I have, the reports I look at, pull all that together and get the personalized advice in there. So that hyper-personalization is coming in. I mentioned Kogo, that's doing it on the environmental side. And so the hyper-personalization, using that vast amount of data, is finally happening.
Wow. Sounds exciting. I think this is also equally applicable for insurance company as well, because when they are providing financial planning for their clients, most of the time, each individual will actually have different requirements in terms of their own profile. Right, great. Thank you for sharing.
And sorry, Danny, if I can just add,
Sure.
It's not just financial sector. If I was to look at retail, e-commerce, you can do the same hyper-personalization there as well for your card payments, for your e-commerce payments. I mean, the list is long. It's just a question of how do you extract the data, personalize it, but you still don't make it look like a robot. You have
Correct.
to kind of make it personal. So if I get it, whether I'm mass affluent, poor, whatever it might be, the reality is we've got to make it a bit more personalized so that when we go and make use of it, it becomes agile enough to kind of not look impersonal.
All right. And most importantly, it doesn't look like it's pressing on the client to commit. It's rather a passive thing that suggests to them, you can do this, you can do that based on whatever current situation that you're facing.
Exactly.
Yes, thank you very much. All right, Arjun, I have interesting things for you that you were talking about the landscape between the digital only and the conventional bank. This area, how are you actually looking at it? How do we actually close the gap between the two areas? Or is there any suggestion or proposal that you have?
So thanks, Danny. That's an interesting one. And these are my individual thoughts on this across the sector. I think, look, the digital banks have been there for some time now. I would probably say the last 7-8 years. And the advancement which they have done in the services sector, I think, is unparalleled, right? Before they came in, Rajat did close to 3 decades at HSBC. Richard spoke about his stint at Citi and a few other financial institutions. I think between the three of us, if we add it up, we'll have close to about 70, 75 years of digital experience, right? And if we add yours, I think we'll touch closer to the 90 part around it. I think the way digital was looked upon in early 2000s to the early 2012s around that time had changed. And it was started off as a channel to facilitate the customer to do things at their own ease. It was just considered as one more channel, when banks wanted, like ATMs when they came out were a big part. And for a few of the listeners on the call, it may sound like we were in the gray age or the dark age, but yes, ATM was one of the channels. Then the contact center came and the branches, and digital was another extension of it, right? And now obviously banks are getting into a different mode in terms of channelizing traffic towards it. But if I bring the conversation back, that's how digital started, right? And a few of the players who said, in this banking ecosystem, can we create a niche of being that individual digital bank, which will help us take the client experience, and take the profitability to the next level. Now, very good thinking, very good vision 7-8 years back. If you really would have asked, I think, any one of us or anybody in the industry, I think that was, considered to be the next big thing, right? Obviously, the next big things, some of them have played off, some of them have not. I individually think that the digital banks have not really lived up to the expectation. They have pushed the boundaries positively on the traditional banks on a few things, and a few things which they are good at, right? The digital banks are fantastic at setting new standards on service, right? Which was not there, quicker, faster. The second thing which they've been very good at is they've been very transparent around their fees structures, which traditionally the banks were not very open or comfortable doing, but by virtue of the digital banks coming into this space, I think the traditional banks have become more open. And I'm talking as an industry out here, right? However, my own experience with the digital bank has been, I'm not going to name, but when you land up into a problematic area, and I'll give a specific one, I opened an account for my son, who is less than 18, so a minor. In Singapore, I opened the account. I have to say the onboarding experience was fantastic. In 15 minutes, 5 minutes actually, I opened the account. 10 minutes they took for verification, which I was not online, and they said your account is active, you can start transacting. So fantastic, right? So I'm becoming a fan of it. 3 months later, when he was trying to use the card and he opened his phone and he looked at the app which looks at your face, it would not recognize. I thought it must be a glitch. We did a lot of permutation combinations, it didn't work. Now there was nowhere I could reach out to the bank, right? Then I've somehow struggled, got my specs out, looked at where that contact us service option was, and went in there. Okay, they heard me out and they said, oh, it's an issue with the version of the app. And I said, is it my issue? They said, no, it's an issue at their end. And it took them 6 weeks to solve that, 6 weeks. So from my perspective, the positive impression which was created by virtue of that 5-10 minutes of account opening, that wow, went to a not so good experience in this bit, right? And I think that is where a few of us, and I had that experience, I hope it's not with majority, but that is why for most of us, if we ask if our primary bank is a digital bank, the answer is no, right? Service plus trust, right? Now, when you come to the traditional banks, like I said, I think the trust generally, most of the banks have been around for 80, 100, 150 years, right? And people like to bank, and especially public sector banks across Asia, they're backed by the respective governments. So people feel that the money is more safe. We've seen a few runs on the other side of the world, and we know how it can look like, right? So the trust part becomes very, very important. Second is the full suite of products which a traditional bank gives. Most of the digital banks would not be giving out cards, or would not, when I say card, being credit cards or loans, unless there are some full stack banks, full stack digital banks only, but very limited. So that's predominantly the other place with the traditional banks do very well, right? Where the banks have not done well, where they were slow, they were not very cognizant of the client needs. I think that part has changed around it. So, however, it's not that all banks are in a fantastic space. I have another example to share is, I wanted to open my wife's account last year with another local bank out here. And I said, because you diversify your risk, right? You don't have all bank accounts in one place as a family. So I went to a local bank online, and they're supposed to be, there's not a digital bank, but it's an online. Asked for details, scanned it, gave it. 1 week, 2 weeks, nothing happened. And my wife looked at me one day on a breakfast morning and she says, hey, aren't you a banker? And I'm like, yeah, but why is my bank account not opened? I had to show her my staff ID and say, this is the bank I work for. It's not that all the banks are going to be doing. But behold, I picked up the phone. We all know a few people. I called up the contact out there. And guess what, Danny? In the next 3 hours, somebody called and said the account was active. Now, if as a common man, I don't have a contact, what am I supposed to do? Am I supposed to keep waiting? So I think banks, we as the traditional banks also need to play up on that particular piece and be able to give better quality services at the right instances around it, right? Profitability, if you look at it, most of the banks are generally profitable from a traditional perspective. And the balance sheets are very well liquidated. Obviously, there are exceptions, but most of them are sort of strongly capitalized banks around it. So I think when you look at this, I know I work for a traditional bank, but we also have digital banks. And I think my view is that, my personal view is, I think the digital banks are a little short of what all of us expected it to be. And technology has helped enabled, which is what it has helped them to catapult. I think if traditional banks, which most of us have got our act together, if we keep on that journey of being truly digital and try to do a customer wow, I think the gap will keep narrowing, and traditional banks will be here for a little bit longer than what everybody would have anticipated 7 years back, Danny.
Right. Okay. So there's no worry about the traditional bank going out of business soon. Yeah.
Might be,
Right.
yes.
They are here to stay. Yeah, they are here to stay. Right. Just that moving forward, probably on the digital banking part, that they will need to enhance in terms of the service. Right. Okay. All right. So
Danny,
moving
if I can
forward,
point make
yeah,
one
sure.
observation, and I would love to hear Richard and Arjun's view also. I think even the digital banks have realized the need to be a full stack supplier. But what they've also realized is they don't need to be a full stack organizer. Where I'm coming from is, okay, if I need to provide Forex, can I do it through a B2B partnership? If I want to do buy now, pay later, can I do it through some other partnership? Do you think that agility is coming in and that is actually going to make the dent to traditional banking, because all these partnership conglomerates white labeled as one digital bank could make a difference?
So my view, Rajat, absolutely fair. I think that's an ecosystem. That's one of the spaces which most of the big banks are already on it in terms of partnerships. Because when you want to grow your mass affluent, like you spoke about, right, the mass client base, you need numbers as a bank. And when you need numbers, your populations are going to be, an X amount. So you need to be really able to transverse across the ecosystem of the pure financial pit. And like you said earlier, I think the conversation is not only in the financial ecosystem, but I like what you said, which is going into e-commerce. I would say it's going into hospitality, it's going into airlines, it's going into multi-dimensions to what we would not have sort of thought about it, right? So partnerships, I think, are here. I mean, I would probably go back and say, when you were with HSBC, you would remember that there would be those credit card partnerships which would have been done at that point in time, and Richard would remember from his Citibank days, right? So the partnerships have been there. It's now taking it to the next level. And yes, you're right. Again, I think the digital banks, in my view, have started taking a leap step forward on that. And banks have realized, hey, we used to do this. Why are we not really doing it in a different form and shape? Some of them have caught up. Some of them are beginning to sort of wake up to it. But yes, I think that's going to be a very important and essential pillar if one really wants to grow the number of mass retail clients, at least in the next half a decade. I think half a decade in banking now is like four decades earlier.
Yeah, a combined experience.
All right. Okay, with all these wonderful innovation going around, there's also something that we need to address, right? That is actually the risk aspect of it. Especially in recent weeks, you can see Singapore, actually, we have a news about all these scam going on. Even CPF money, Central Provident Fund, they are able to touch it. So with that in mind, gentlemen, do you have any proposal in terms of future innovation to take care of the risk management?
I can talk a little about it, and then Arjun's probably going to be the expert on it, and he can make it real. So there are the scams that are going on. There's a lot of publicity about them in most countries in the region. But I think that one of the big dangers at this point is coming from generative AI. And that will change significantly how fraud happens. The stories are starting about being able to access your bank account. A lot of it's been, of the access has been moving to voice recognition or facial recognition. And there are people in the US and Australia and India who, reporters for newspapers who've sort of used the thing like 11 Labs on the voice, and then to simulate their voice, and have gotten access to their bank account. There are individuals that have used that, simulated a family member asked for money and money is sent over. And that can all be simulated very easily using generative AI. The facial recognition is not quite at that level yet, but it is gradually coming in. So I think the problem is going to get worse. On the other hand, the banks can use AI themselves to overcome it. So one of the things that is being done with is the behavioral analytics, which has been done a little bit so far, but it's using AI to say, did the person use their usual pattern? Did they type at the same speed, speak at the same speed, log in from their usual location, put that all together very quickly, real time, and do some of the preventative measures. If the bank software is good enough, it can do some of the detection on the voice that's coming in. So it can work on both sides. There's the fraud side, which is the big risk, but there's also the preventative side that it is coming up as well. So it can go both ways, but I see that as sort of the next wave in there of risk in particular.
It's literally a double-edged sword in this case.
Exactly.
Right? Yes. Okay. Right. So is there any suggestion in terms of making use of blockchain, since blockchain is also one of the more looked at technology at this moment of time? So gentlemen, any view on this?
Are you talking blockchain from a fraud perspective, Danny, or are you talking of blockchain from a general enabler perspective?
In a general sense, probably apply in contract, smart contract, or transfer of funds.
So look, I think first is the blockchain and crypto, I think, get used a little interchangeably, and I got myself educated last year that they're very different things. Blockchain is a technology and crypto is an asset class. So the first thing is, I think, for people to understand the basic difference around it. I think the other bit is, of whatever little I know of blockchain, is it's like anything else. It is a disruptive technology, and it has its specific use cases, and its use cases have to be something which is complex across geographies, across different companies, where there may not be complete trust, and it helps to create that trust, right? And that's where it's sort of the genesis of it sort of started off with. I'll probably share an example from the shipping line, right, where blockchain was first, one of the successful use cases was sort of done, where they wanted to start tracking where ships were at any point in time, and then basic that, look at the logistics, they take how much of time it's going to take, then plan out the next shipment going, or perishable goods, etc., etc. And without naming, but when one of the leading shipping liners wanted to get into it, the other competition said, why would I really want to share my data with you, right? And that was absolutely fair enough. So they started off individually with blockchain because they were a multi-country sort of a shipping line. And then over a period of time, the competition saw what the advantages were, and they came on board. Now, in the financial services example, there are, I think, multiple banks or institutions have done, cross-border payments. They have done trade payments, etc., on blockchain, right? So I don't think it is not tried and tested. I think what has really not happened is that it's not taken off on that size and scale, right? There have been experiments here, there, in bits and blobs of it, but even in that pieces, it has not really taken off in its entirety. And in my mind, there are two things which I shared, which I think are very important. One is you have to have a true use case, which is pretty complex by virtue of what blockchain can solve, because that's what it does, right? You put it in a simple place and it's going to be completely non-effective. And the second is you have to get competition together to be able to do it. And in financial services, I think predominantly it is that the ecosystem is not like that. And if I take it back to your fraud question, Danny, right, which Richard spoke, and he gave a very valuable input, was the analysis of the data, which either an institution has within or across institutions, is something which is not happening. So imagine if a institution is defrauded, let's say, right? And if that is like we have a credit bureau, if there's a bureau without, obviously keeping the privacy factors in mind, if one could have something like that where you could put down fraud data, which has happened with a, particular bank, this was the nature of it. And when that gets circulated, I assure you all banks will be picking that up and close to real time, right? And I think that's some place where, as an industry, we've got to get better. We've got to get the regulator with us to be able to co-create that ecosystem where there is trust, there is faith, and we genuinely have, obviously all of us want to make profit, but we have the client's end mind in game, which is having a trustworthy relationship on the financial system overall.
All right. In other words, it needs to involve the government, probably the central bank of each country, in order to make it a success.
And it will need that.
Sorry, Rajat. I'll just say this one. And Danny, what you say on central banks is very interesting. We think that the central banks don't talk to each other. The reality is that in the region, the central banks talk to each other on a reasonably frequent basis. So they share information on policy making, right? But we as banks are not able to share information which will really take it to the next level. Sorry, I just want to share that bit. Over to you, Rajat.
Arjun, I was about to say that only. The policy is there, the implementation gets fraught with issues. It could be, as you said, I wouldn't say trust, but because of a divergence of thoughts, opinions, C-suite ambitions. I think another challenge is data interoperability. So a bank has a data in a particular way, another institution has it in some other way. How do they both talk to each other? And so much money is spent on trying to find a provider who then does this arrangement and then charges them a bit of money. And then everybody gets up and starts jumping, saying, why am I paying a couple of $1 million a year for this feature, which is not giving me any commercial benefit? And I go back to my AI point. These features are superb. They give you a lot of data and analytics. Can I make use of that for some other commercial purpose, which then allow me to say, this is a fantastic feature, and it also gives me this commercial benefit.
All right. Sorry, Arjun?
Now, I was saying I completely agree with Rajat's thought.
Richard, anything from you? Okay, all right. So I think we are almost done with the topic. Let me see. Is there anything interesting that you would like to share? I am actually looking at IoT, Internet of Things. Is there any actual possible application in terms of banking, in terms of providing a service to make it better for the customers?
I'm not the expert on IoT. I was going to get on a different topic, but if Arjun and Rajat have ideas on IoT, go ahead, please.
I think, again, I'm not the best expert, but I can tell you that it is there, it's coming. Now it's a question of being selective and making use of the right mediums to support your business, whether it's the financial sector, whether it's medical, whether it's retail. It's there. Now the problem, as even Arjun said it, was through his example, just because it's there doesn't mean it sounds attractive to do. It has to be something sensible, commercial, practical, whatever are the right tick marks to put out there. So I think the IoT concept is fantastic. It's now how to do the execution and sensible commercialization and utilization. Blockchain will play a huge part of that, because if I'm an end consumer and I'm looking at the CX, I can make decisions and choices on what I then want to make use of from the blockchain that will suit my requirements and what I don't want. Because right now what happens is a particular institution goes with a full suite of services and products and says, right, we're going to give this to you, and guess what? We're going to charge $100 from you, because that's the way we price it. What blockchain will do is it'll say, right, in the Internet of Things, these are the different functions, these are the different services. And hence I go back to my B2B partnership question. Which are the ones that you want to cherry pick and use for your requirements? And this is not just about affluent, mass affluent, high net worth. any client, any shopper, any visitor to a hospital, anybody, they can make choice of it and say, right, these are the 5 things I want. How do I blockchain it, put it into my digital solutions, and then do sensible commercialization of that?
All right, thank you very much for the sharing, Rajat. I think that's wonderful insights that you have just shared. I think moving into the future, there will be more and more software as a service replacing the in-house application development as it go along because of all the wonderful fintech company that is up and running. So is there any things that you can share about collaboration with such a fintech company moving forward? Instead of letting them disrupt the banking industry, the insurance industry, how would it be in a better position to collaborate with such companies?
Yes, I think my view, Danny, on that is that fintech is not going to be a flash in the pan. It's here to stay, right? And we have to, as an industry, when I say as a financial service industry, we have to respect and give them the space which they duly should get, right? There are a lot of examples where there is coexistence of the fintechs, right? If you look at most of the big banks in the digital space, they are partnering with one fintech or another, right, for a particular problem. But there's also a view that, the banks can do a few things better in-house, right? And that can be a variety of things depending on what the skill set or what's the niche area which the bank wants to get in. Recently, if I take it into Richard's previous area on cards, you'll see on Visa, and he spoke about Visa MasterCard. Visa MasterCard are one of those few service providers where you'll see they have a lot of acquisitions which they have done in the last 1 to 2 years, right? And it is, I think, how an individual company sees how you're going to add value to it, right? Earlier, you would see in the banking space, there was a lot of takeovers. But I'm trying to rack my brain in the last 5 years, other than where the central banks have asked a bank to take over a bank for stability reasons, you don't see those massive acquisitions of banks happening any longer, right? Because the ecosystem of what one wants to be in a particular market or in a particular segment, there's a very clear need which most of the places, people have sort of defined around it. So I think it's like a cycle. And different companies or different sectors will be going through this evolution. I see fintech as collaborating partners more and more than ever before as the pace of technology keeps getting more and more around it. So
on the fintech side, I helped set up the Fintech Association in Singapore about 7 years ago, and was the first secretary for it. And so I followed it for, since it started up pretty much. And at that point, there were about 100 fintechs in Singapore. And we thought, wow, we were trying to get over 100, and took a long time to get there. And the thought was that fintechs will rule the world. Banks were all worried about it. Move forward 7 years, and exactly as Arjun said, you're seeing partnerships. If you think of, there are now over 1,000 fintechs in Singapore, and around the region there are hundreds more, and so there are plenty around. But if you try to look at fintechs that have been very successful and are the unicorns, billion-dollar valuations and all of that, I sort of struggle to find them. Maybe there's too many around or something like that. But what you do see is the partnerships or the acquisitions where financial institutions, whether it's banks or another fintech that's merging, fintechs will merge at times, or the tech companies are trying to get into banking, so they'll do things. You'll see that either partnership or acquisition as a way to get new technology. And in some cases, unfortunately, it's been to stop competitive technology from moving forward. Majority is to help out, add technology, but there have been some other cases as well. So it really is very much a different model than what was expected 6 or 7 years ago.
Okay, Richard, you sounds like if You cannot beat them, you kill them.
You don't kill them, you take them along, Danny, right? And I was watching this
Yeah.
video, which was a very interesting one, where the individual gets into the car and he or she starts driving, and then there is an alert which says you're above the particular speed limit. So that was one bit. Second was the person had an accident, and the watch sent out a message to the nearest hospital, and the hospital, because they were connected to the database of what all were the individual's allergies and what all this, was the history. And when the patient reached, they were actually all ready. So if you really see, there is so much of innovation which has happened and how it has come together. And sorry, I'm using this word again, it's creating that ecosystem. And I think Rajat used that data interoperability, which is becoming very, very important, that when you want to start sharing it, and that's what becomes important. And you create that ecosystem that you have partners who want to do a partnership with you to be able to be a part of that ecosystem and create something which the customer is now becoming used to it on a consistent basis, which is a wow service.
Right, interesting sharing. Wow. Okay, where can I get the car?
I will give you a call offline.
All right. Okay.
In Singapore, you'll have to pay a bomb in any case.
Oh, yes, yes. Before you get a car, need to get a COE, certificate of entitlement, which is very high now. All right, thank you, gentlemen. I think we actually have another 9 more minutes. Let me check if there's any questions for us. I don't think there is.
If I can just add on sort of one thing that I'm seeing, and sort of in 2 different areas that are related in one sense. One is the development of the central bank digital currencies, CBDCs, around the region. If you go back about maybe 4 or 5 years, China was beginning to move forward with it, but vast majority, probably 90% of the central banks around the world were saying it's too risky, we don't need it, we're never going to do anything. Fast forward to this year, about 85 or 90% are either developing it or some have already implemented it. And so there's a massive change going on. And what that does is, if I've got my money on GrabPay, for example, I'm hoping Grab doesn't go bankrupt because it all depends on Grab, right? But if it's central bank digital currency and they're holding that CBDC for me, the central bank basically guarantees it just like they do any other currency. So it changes how things are done. A couple of things are happening with it as well. One is testing is going on for cross-border usage. So the Bank for International Settlements has been very involved with that through the center in Singapore and then some other places. So that's going on. The other thing is when you look at it more on the wholesale banking side, China has requested, shall we say, request is a relative term, that some other countries pay in CBDCs using the RMB. And so it could change how trade flows. So I think the Koreans in particular got very worried when they saw what was happening in China. So they started developing their own just to make sure they could keep up and that trade would not stop. So there's been tremendous development in there. I mean, it's scary in one sense because the central bank could have all your data on every single transaction you've ever done and stop them and all kinds of things in there. But it's also very good that it is a more reliable currency. The other thing that's different but sort of related in terms of the payment side is the cross-border payments within Southeast Asia and over to India. And so you're getting PayNow in Singapore and PromptPay in Thailand going cross-border. Initially on the consumer side, but gradually moving into the commercial side, the business side. And then you've got India with RuPay and the UPI that is going out. They've linked up with about 6 countries so far, anything from Singapore to Nepal to I think Dubai and adding more on. They're targeting at least 30. And so those cross-border linkages where I can use my local currency in another place with my digital app is another digitization that is making a significant difference, both for consumers and for businesses.
And Richard, if I could just add, the difference between CBDCs and other forms of digital currencies is the persuasion and the determination of the government and the central banks because they recognize I wouldn't say the dangers, but the inability to control tokenization and other digital currencies. So they'd rather have everybody diverted to use of CBDCs. It achieves a social purpose, inclusion and all those questions they do bring into the argument. But the reality is about, I wouldn't say control, but about discipline. It becomes part of the monetary policy, all those other things, the check boxes. But the biggest thing is that this has got the political gunpowder for all these places. And, to what Richard said, it's not just about CBDCs, it's also about, different participants coming together like BRICS. I've been talking about what BRICS is doing. A lot of people still think it's a bit far-fetched. I don't think so. I agree, it's not going to happen now. But give it 12 months to 18 months, and I think that will come into the ecosystem in some point, in a digital form. It won't be in a paper form. It will be in a digital form.
All right, we have a question coming in. A long one. Even in the UK, there are no big acquisitions, but the reason is a combination of economic uncertainty, banks trying to reinvent themselves, and learning from startups. From startups too big to acquire, example, Starlink. Open banking, API allow collaboration. So that's not really a question, it's a comment. What else? What is one thing you see still that is unique in Asian market that Europe and UK are lagging? One innovation idea maybe?
Banking apps. No,
Oh,
I mean, it's just so far ahead. Yeah. Sorry.
I would put it in a different perspective. I think the biggest attraction for Asia is scale. Now, you have a lot of innovative ideas. Honestly, it's not as if someone sitting in this side of the world is a brighter spark than someone sitting elsewhere. The problem is, even if you have a bright idea, you still need it to be commercially sensible. And for that, you need a bit of a scale. And it's where the scale is. Africa, Asia, to some extent, Middle East right now, which are far more accepting to adopt something than on the other side. I think that to me is the biggest differentiation in innovation standards, if you ask me personally.
And if I can just supplement Rajat to what you said, M-Pesa I think is a very clear bit where they didn't have internet in Africa when they were sort of getting onto payments, but they got to wallets. So they really skipped the whole internet age in between. And a lot of countries moved, and M-Pesa is a classical example. They really adopted to the new age technology of the wallet, and then they took it to the next level because they had the scalability. I think so. It just validates what you said in terms of scalability. Is a very important attribute, which I think should be a part of the business strategy.
Okay, I'm checking at the time. We have about 2 minutes. Is there any other questions coming in? Okay, right. I think we can round it up. All right, today we had the honor of having these gentlemen here, right, or the giant of the industry to share with us their insights on innovation and how digital transformation will be here to stay, and moving into the future, more exciting things will be coming in. I have any last comment? All right, so if there is no more questions, right, we can actually stop here. Right, thank you very much for your time, and thank you for the audience attention. Right, hope to see you again in the main event. Right,
Thank you,
Danny. Thanks,
Thank
everyone.
you, Danny.
Right.